Good morning. My name is Scott Redler, Chief Strategic Officer at T3Live.com.
And I'm Brittany Umar, and together we bring you Morning Call. So we are seeing red arrows around the world this morning as the problems faced by Italy's government worsens and our government faces a partial potential shutdown. So the weakness that did start a week ago when the Fed decided not to taper, does that weakness now intensify if we do get that partial shutdown?
You gotta love the politicians, right? Working so hard for us. No one likes uncertainty, and there's talk that now if we do get the partial government shutdown, then perhaps the jobs report doesn't happen on Friday. Some people say it does, some people say it doesn't, but you know how Wall Street is. We like to know what's going on when.
Right.
But you know what? Thank goodness that we had some of those faulty signals, you know, after the Fed, that breakout failure above 1709, because now this can create an opportunity because at some point, this too shall pass.
Mm-hmm.
What's that from? That's from a reading or something.
Yeah.
You know, it all passes. Just
Right.
the question is, what's your time frame? And you know, and can you take risk? And what's going to happen today? And if you look at the chart of the SPX, you will see that you know the trend has been very strong since the November lows. You know, we follow it all the way up. Got tested here in June, tested here again in August. This was a false breakout on May 22nd. That led to a 5% move. Here is a small false breakout at 1698, creating that head and shoulders top. That led to about a 4.5% move. So thank goodness almost that we had this false breakout here at 1709 because that got some of us out of the way. And then even last week it was a little frustrating. We played around with some paper cuts trying to buy some weakness, but you couldn't buy strength. So now here we are. Here's your 50-day moving average at 1680. We're below it. Okay, so what I'm going to be looking at to see if it could hold is right here, boom. Okay, which this is your low of 1674, which we're right around pre-market, and then see if we could bounce off it and maybe close back above the 50-day, but I'm not going all in because, the 100 days right here, the trend line's right here, we might test that. Plus, if we get the action we get today, then tonight, you have to make another choice, if you're a trader on whether or not it really gets shut down or it doesn't. And then if it does get shut down, how many days?
Right.
So nobody wants to go home long and then come, because some people probably went home long on Friday trying to be cute, saying, you know what, they're Washington, they just wanted attention, they're going to get it done, and it didn't happen.
Right.
So you have to know your risk, and if you have no risk on and we get a big gap up, you can't be upset and you can't be, banging your head against the wall the same way if, whatever, you put risk on, hoping for a gap up and you don't get it. So just know your levels, know your time frame, and if you're a macro investor, what did I say before? This too shall pass.
Right.
You survived 1987, you survived 1998, 2001, 2007, and 8. You'll survive this. Don't get out of your equity strategy over the next X amount of years because of a potential government shutdown. It's just, more short-term volatility that if you know how to deal with it, could create that opportunity.
So for today's action, let's talk about what we can potentially look at. We know that out of the sectors, the biotechs have been the strongest group as of late. So how much will you be watching that group today? Well,
in a sea of red, you want to see how the leaderships hold up. If the leadership continues to hold up, then the correction is somewhat shallow. But if down moves start to intensify, they go after everything. So just don't buy the leadership groups. It's like, okay, they've been going up, let me just continue to do that. If you see the relative strength and you see a divergence, stay with it. And if you look at, the IBB, you will see that, I just showed you the spiders that have been trickling below, down to the 50-day or so. And here we are at the 8-day with the 21-day right there. So your upper level here to trade against is 208. Stays above 208, you could see a lot of strength in the bios continue. If it were to break below it, you have the 21-day, and then you have the prior breakout here at 201.47. Just to show you, look at Celgene, for instance. What a move. Okay, I know it was a little wishy-washy the last few sessions, but a nice breakout move, even with the market being lower on on Friday. So just goes to show you that stock selection matters, and you want to make sure you know where you want to live within this tape.
Right. Well, we also like to look at the financials for clues about market direction, and this group hasn't been so strong. Tried to find their footing last week, though. So what do you think here?
Well, this is definitely good for the broader market, and they started to weaken before. And this was another group that actually gave us a healthy dose of skepticism because when the S&P broke out after Fed Day, the financial said, I ain't going anywhere, and that could have given you some clues to have some risk off. If you look here at the XLF, you will see that this was the prior high in July, and then look what we did. We matched it. didn't break through like some other sectors. So that could tell you, just be a little bit more careful and look what happened here. So with that being said, you take a closer look at last week's range. It did try and hold up here. So short term, watch 1994. 1994, if it were to break and close below that, it might be under there right now. Here's your 1980. If it breaks below this, it could start to at least go back down, and that trend will be broken, and then you could see, 1940-ish. So, this will be something to watch today to see if the financials can go green and pull us out of what could be, or what looks like a sea of red.
Right. What about the home builders? Has been digesting the recent sell-off from September 19th and hovering around the 8-day now, so pretty key that it would hold that level.
It'd be nice, it'd be nice to actually have this on the side of the market, because for the last month or two, it's been a little bit of a headwind. And if you look here at the home builders, you'll see that, it did break above this trend line here. And, on that Fed day, it had a nice move that had this red dog reversal right there. And it's been like tailing into this wide range bar. So, I would say for this to be super duper constructive, it's just got to stay above 30. Let this stay above 30, and this could be more for a bull case versus a bear case. If it starts to fail there, again, you're not going to see much traction in the market.
We also like to look to the Russell for clues about market direction, and the Russell's actually been holding up well, so that's a good sign. Surprisingly,
right? With the pullback that we had, the Russell, which is where growth is supposed to be, and growth is supposed to not be around. But anyway, strong group. Let's see if it continues. Here's your chart. This is your trend. Your trend's been intact, since November. Tested it a few times. Now it's at this upper level here. So you just want to make sure that holds, okay? And it looks very tight. And here is this upper flag, your 8-day moving average, right down this level, 105.79. That is your upper momentum area. If this were to give, that would show you that they're coming after even the strongest sectors. Here's your 21-day, and then here is your 50-day. So with that being said, that's your plan, and wait for the market to let you figure out how you want to confirm it either way.
Well, and then the consumer staples group has been the weakest. It's been hit the hardest, still stuck in that downtrend that's been in place since September 19th.
Yeah, this is just something that's building this upper channel, and it's neither a leader laggard. It's just in the middle, just to show you how there's just some things that are not interesting. And this actually kind of looks a little bit like the financials, where it came back up top, failed, now it's smack in the middle. And that's a problem here. A lot of these sectors are smack in the middle of these ranges. So you don't know if it's going to go back to the bottom, or if it's going to hold in here. And if it holds higher, then next time it gets to the upper end, it probably breaks through. So there's a lot to learn by watching what area of these channels they hold, and as of right now, it's kind of smack in the middle, and it's not that compelling.
All right, well, coming up, we're going to go in the trenches with the metals, which of course perked up after the no taper rally. But first, a quick commercial break. We'll be right back.
I'm Mark Sperling, Director of Trading with T3 Trading Group and contributor to T3 Live. Do you trade on your own, but you wish you enjoyed the benefits of a large trading floor? With the T3 Live virtual trading floor, we deliver that experience to you on your computer. On the VTF, you can follow the long and short positions of experienced professional traders like myself, Scott Redler, and others, and listen to our live radio stations as we navigate the markets. In addition, you get the added value of a large community of sophisticated and like-minded traders. Your membership to the virtual trading floor also includes access to our 2 very popular newsletter products, Off the Charts and the Price Point Sheet, at no additional cost. In my opinion, joining the room will be the best trading decision you will ever make. I would like to invite you to begin your membership with a 7-day free trial. To get started, visit t3live.com and click on the Virtual Trading Floor tab. Have a great day, and I look forward to seeing you in the VTF.
We're back and going in the trenches with the metals, which of course perked up on the no taper rally, and gold perked up a bit in the past week. What do you say to all the gold bugs out there pulling for that new bull market in gold?
I wouldn't. I wouldn't let the paint dry. Whatever. I don't know. Good red dog isn't here. It's only Monday morning. I'll just say that recently it's trying to hold in there. It still has a lot of work to do before anyone can declare a new bull market in gold. You'd actually think it would be responding even better today than being up what it's up. And if you look at the trend here in gold, it's been down. Since on this year. Here's your top. Here's that intermediate area when it broke 180. Here's that macro spot when some people got out around 149. And now what the bugs are pointing to, which let them point to it, is that you have a potential, inverted head and shoulders pattern. Left shoulder, head, right shoulder. I'm sorry I've marked these up and didn't take them off. But anyway, that was a blood in the street lows. Here was a nice rally back to resistance. You know, you take a closer look over here so you could see. Wow, this is noisy. Well, with that being said, you know, you look at here, it's below the moving averages. At this point, this really looks like a chopped up mess. Look at this wide range bar you saw on Fed Day to get your doji to then fail, then to hold a little bit higher, and then, you know, come halfway back into it. So I would say 129.58. If the bugs want to do anything exciting or be excited at all, at least get above that and hold above that. But then you have this to deal with, that to deal with, and a lot going on here. So don't get overly, you know, excited about the metals until you see something very potent here. And right now we haven't seen that yet.
What about the miners? Do you see anything more compelling here?
No, I think the miners actually, you know, gave us some clues back in June that there was a nice move to be had by the potent move, but recently they're still locked in this downtrend. Not much exciting going on here. You look at this overall trend in the miners, it's been gross. Look at that. Oops, sorry. You know, to the downside. And then if you want to look closely, you know, on individual action here, you know, it's still, look how close it is to the lows. All right, and this also is hovering now below the gains that it had on Fed Day. So it's not like there's that much interest here, unless, you know, it's one big fake out, which we can't trade based on fake outs. You know, here is this lower level. In order for the miners to get better at all, for something more sustained, got to get above this, what is this, 26? Okay, and at this point, it looks more like a bear flag continuation pattern to the downside versus something compelling to the upside.
And silver lagging a bit. What level would you say it needs to get above to look a little better?
Let's take a look at the chart because I haven't been focusing. That was the vehicle I chose in June, and it was a nice one. Now, you know what? It's really not that interesting. Okay, look at again the potent move that you had on Fed Day. Tiny bit of a red dog reversal right here. Gap down, trapped a lot of the longs, went back to the bottom, and now hovering in this lower end. So that doesn't tell you much excitement. You know, this was a nice move right here. That 17.5 to 18.5, boom. You know, but since then, not really that much to get excited about. So you want to take a closer look here. All right, this is what you're watching. This also looks a little bit like more of a bear flag than something that's going to continue to the upside. So anyway, silver to do anything has to get above 21.15. If it doesn't, I would not, you know, be long there. And at some point, if it doesn't get above that, it could get some continuation to the downside. So these metals just have been one frustrating trade for anyone who's been looking for consistent upside. Right. You know, there were some cute longs along the way, and I think a lot of shorts got paid, but if you had a thesis on gold, and there are still people out there saying, next year it'll be 2,000, if not next year, the year after, those are opinions. Wait for the trend to get back in action.
Right. All right, well, let's do some quick hits here on some high beta tech names, starting with Apple. We have that meetup between Carl Icahn and Steve Jobs. Perhaps that could do something to lift the stock today, maybe? Well,
now it's Steve Jobs. They'll be trying to talk to him up there.
Oh my gosh, Tim Cook, wow.
It's okay.
It's Monday.
But they might need to channel some Steve Jobs into Tim Cook.
Right.
And that's what actually Carl Icahn wants. He wants Tim Cook to actually be a little bit more exciting and out there. And with that being said, you look at the chart of Apple and you will see that, you know, it's hanging by a thread here. Okay, this is that lower range. Remember the gap up on earnings, and it had a really nice move. And then from here, it's trying to hold on to the upper end. So today it's down $4 or $5 with the futures. If you see divergence, maybe buy something, go positive, especially if you don't own any. You know, but in order for this chart to look a little bit better, it's going to have to get and stay back above, just say yesterday's low of 480.72. And then, you know, look out for his tweets. Sometimes it moves the market. They're looking for some kind of buyback, and you know, they're still looking for iPad, iWatch, all those things. But overall, hanging in there. Just needs to start acting better soon. Otherwise, everyone's going to start losing faith once again.
How about Google? It seems like we are just talking about Google and its potential to be the next $1,000 stock, but it's been stuck in a downtrend since last Monday.
Yep, you know, that's why you have high-level stops. It had a nice flag pattern. I got stopped out 895. So you know what? This week I'm going to look at it as a different opportunity. So you look here at the chart, you will see, you know, right around here. If you remember, it came coming in Monday last week. It looked really good. Nice bull flag. Here was your descending channel, held higher, you know, and then boom. And then I was like, you know what? Perhaps we see some strength this week. We could see a move over 906 and then over 920. Blah blah blah. Didn't happen. Stopped out. So then on Friday, looked like it reversed a little bit. So with that being said, with the futures down, you know what, if I liked it for a potential breakout trade, maybe I'll look for some type of hold in there trade, and the low is 871. If it were to hold that and go green, maybe it's a spot for some cute cash flow.
How about Amazon continuing to find support at the 8-day and building a tight upper level base here? So do you think we're going to get a breakout soon?
It's a candidate for one, and it's acting much better. Google and Amazon both kind of woke up together. Amazon made new highs and Google didn't. So with that said, it's showing more relative strength. You look here, this was that breakout move that we were targeting in June, happened, and then earnings was a little bit of a mishmash, came back, retested, and then look where we are, hovering above the prior high here. So you take a closer look here at Amazon. I'd say as long as it stays above this 310, stay with it. Okay, stays above 310 during this corrective phase. Once we turn up, this is something that you could look for a continuation move above 320. So this is, should be on your A list for relative strength if it continues.
Speaking of relative strength, how about Netflix? Nice 3-day rally last week. Did take a break on Friday, but staying above all key moving averages.
This too, it's acts strong. But there's so many people out there saying just watch out for these high beta strong stocks because it's the end of the quarter. So maybe they're being marked up. So, you want to be just a little skeptical. You don't go all in the day after or whatnot. And anyway, this stock trend is still strong. It's been following it for a while. It's been above the 21-day for so long. This was when you had your little recent scare when I think it was actually last Monday. It opened up, wide range bar, held important support, and it's been trickling higher. Market's been trickling lower. This has been trickling higher. So that still shows you the support is there. I would guess, perhaps it tries again if it can get above this area. If it goes from negative to positive to above 315, you could see continuation. So overall, I look at a lot of these leadership stocks and they're all, still hanging around.
Right. Speaking of leadership stocks hanging around, how about Tesla? Was able to tack on another 1.2% on Friday and close on highs. So maybe we could get more upside action today.
Something to look at. I think it's down small this morning, so a lot of traders say, okay, what was strong, down small because of the futures, you buy it. That's what the good book says in trading land. And you look here at the chart, it's been following this 21-day moving average since last May. Look at this trend to the upside, lots of buy areas. Right here is a nice one, another nice one, another nice one. This was the most recent one we talked about, and then you had a bull flag, and look how it closed on the highs on Friday. So it's something to watch, to go negative to positive, and if it goes positive, then above 191.28 and that road to 200, could be met this week.
So what will you personally be focusing on as you begin the trading session this Monday?
I came in today fully flat. Yes, it would be better to be short, but I'm not, but it feels also good being flat, so I could figure it out if I want to reposition into some swing trades, that show relative strength, or just use some, cash flow methods, maybe the red dog reversal, for cash flow. But I know last week, I was also very light on my feet, but every time I bought weakness, I added on strength. It ruined a good trade. So from this lower level, maybe you could buy some weakness and add a little bit on strength in select areas. But then if we do reverse a little bit today, then we got to make decisions on what to do tonight if they actually don't come to some final, arrangement, so to speak, and then the government shut down tomorrow, and if we gap down again. So I think I'm going to try and continue to keep low gross, low net until I get more clarity. And then once I get more clarity, then perhaps back to portfolio approach. But all in all, I think this is great for some traders out there that have reduced risk because, we're heading into the fourth quarter. We're now almost 3% off the highs. We hit, 1729. Now we're at 1670, 60 handles off the highs. So every day we don't have to hear new highs and feel like we're underperforming if you are underperforming. And, and it could set up a nice positioning for that fourth quarter move once some of this dust settles.
All right. With that said, happy trading. Have a great Monday.